As a follow-up to my podcast interview with Financial Independent Podcast Europe with Matthias, one of the things that I mentioned in that podcast was a contractor calculation. And this will be important for if you are working a 9 to 5 job or any other kind of job where you need to invoice an amount, but you're also interested to find out what your take-home pay will be. So I've got this Excel spreadsheet which you will be able to download in the show notes to that podcast. But I've got this already set up. So the yellow boxes, the orange boxes here, are the input data that you need to use. One of the things that you'll need to find out for yourself, because I've tried to generalize this so that it's usable for any other country. So I mean, I wrote it with the UK in mind, but it's completely applicable for anywhere else. So I tried to use numbers such as 100 or 1000 because it's easy to use it as a generalized number. Use 100 because then you've got a percentage amount. Now income tax, that will just be dependent on your country. And also your brackets within the country. I've used 40% here, but you can also feasibly use 20%, 30%, whatever. One thing to note is that this entire calculation is assuming that your income tax is going to be constant across the entire amount, entire invoicing amount. That's obviously a bit. It's a lot more complex than that in reality because we have marginal tax brackets. But for the purposes of a quick calculation, just stick in a number. Dividend tax, most countries will have a dividend tax somewhere between 15 to 35%. The UK, if you're a basic taxpayer, I can't remember what it is now because I don't live in the UK anymore. But it's about 32% if you're in the 40% salaried income tax bracket. Okay. Corporation tax recently has been a lot lower than even 10 years ago or 20 years ago. UK is currently 19%. Most other European countries are between 20 and 25%, I'm going to guess. That's for you to find out as well, but you can find out quite easily. Just type in your country plus corporation tax into Google and you'll find out. Student loan, so most countries assume that you have a student loan of some kind, but I've taken 9% because that's what the UK charges, but assuming you do have a student loan, put 9%. If you don't make any student loan payments, put 0%. Okay, now we get to the important three. So employer social security, employee social security, and VAT. So I've included links to get to the VAT rates. All three rates here. Okay, so I've already opened these three tabs. So let's start off with the employer social security. Now this is the tax that almost every single employee will forget about. And if you're thinking of transitioning to a contractor lifestyle, you may have the shock of your life when you realize you've got this extra tax to think about. So let's just pick a country, for instance. I'm going to pick UK because that's what I'm most familiar with. 13.8%. It's been pretty consistent over the last few years. Okay, 13.8% employer social security, and I've already got that in there. In the UK, it's called national insurance, by the way, but people think it goes to the NHS. No, it's just a central tax. It's an extra tax on the tax you've already paid. So there you go. Employee social security, and this is this is what employees pay out of your pay packet. I forgot to say, employers' social security is paid on top of your salary. So you will never see this in your own pay slip, but it's an additional tax on top of the salary that your employer must pay. So if you think you're being paid, for instance, £50,000 a year, then the employer will be paying an additional 13.8%. There's a bit of adjustment there for allowances right at the start, but the employer will be paying an additional 13.8% on top of your salary. So that's the expense that a company has to hire you. in addition to like the office expenses. Okay, sorry about that diversion, but okay. Employee social security rates. Something I've got. United Kingdom shows 2% here. I don't think that's the case. I'm just going to Google very quickly because I think I think it should be around 13%. 11%. UK national insurance number. Sorry, national insurance rates. Here we go. Yeah, employee national insurance rates. Okay, so okay, well, I guess that's what's taken the 2% mark. But okay, it's 12 between 2 and 12%. But let's use 12% because we're trying to get a rough idea of what it's going to cost. And one caveat here is that if you're earning in the 40% bracket, then you're probably earning above 4,000 a month. But let's just assume that these to be true, because many other countries do have like combined 30+% employee and employer social security. For instance, Germany is about 19% for both parties, so you're 38% additional tax on top of your income tax, which is interesting. Okay, VAT is 20%. Let's open this tab again, and I've already got the VAT rates preloaded. Most European Union countries are going to be in the region of 17 to 27%. Like for instance, here's Estonia 20, Finland 24, Germany 19, UK is 20%. Gross profit margin. So okay, here you need to try and figure out how much gross profit your business is going to make. Now there are two things you need to think about here. So because I've got three different scenarios here. One is if you're going to assume the profit to be inclusive of your own salary, and the other one is if you're going to think of it exclusive of your own salary, and that makes a difference here. Okay, so I've assumed 30%, and then I'm going to go through the different scenarios, and then this final input is when we try to figure out what an optimum salary / dividends to pay ourselves is. But this is also something for you to play around with. Okay, I mean, you should definitely be playing around with the inputs just to figure out how much is left in your pocket at the end of the month. So scenario one, we've got the gross profit, but we're assuming that your own salary has not been paid yet. So if you do that, then you have to think about the employer social security, national insurance. So already 21% out of the 100 that you start with is the theoretical maximum your salary can be. So this is assuming the business has no end net profit, because your own salary will need to be taken into account. Okay, and then so this is your theoretical maximum salary after deducting SS, employer SS. Employee social security, okay, so that's going to be 12% in this case. And then after income tax, it's another 40% out of your theoretical salary. And then if you do have a student loan, then I'm guessing a lot of people who are looking at the FIRE podcast in the UK probably do have a student loan. If you do, well, okay. I mean, that's your situation. But what you shouldn't see here is, like, in this situation, out of 100, your take-home pay is only about 8%, 8.4% of your starting amount here. And that's assuming a gross profit margin of 30%. If you're in the 20% bracket, income brackets, then okay, you're up to 12%. Still not great, but you're lucky if you're in a business where your profit margin is 30%. Most businesses will probably be in like the 10% range. So you see, like, that completely decimates your take home pay. So it's quite a shocker when you realise how much is disappearing through expense and taxes. Sorry for the background noise. Then so dividend. So scenario 2 then. So you're assuming your salary has already been paid. You're assuming that all of the profit is being paid out as a dividend. So you need to take away corporation tax then. So in the UK, that's 19%, and dividend tax. In dividend tax, I've said 32%. It's not going to be that if you are in the 20% bracket. So let's update that to what the real one is here. Let's have a look. UK dividend tax rates. If you are a basic rate, it'll be 7.5%. Okay. Yeah, okay. So after dividend tax, and then if you do have student loan, it's also calculated on your unearned income, which includes dividends. So if you do have a student loan, it's going to be 16.91%. If you don't have a student loan, it's going to be 18.73%. Now, the interesting one, if we look at a partial takeout as a salary and partial as a dividend, so you have to split the earnings. I've split this so that I've got 30%, but if you play around the numbers, do look at also like down here as well as I play around with this percentage. So let's assume 80% is paid as salary and 20% is dividend. These two boxes are the ones you need to look at. So we've got 15.47 and 14.08%. If I look at 20% as a payout as salary, see how much it increases. Almost all tax laws around the world favour investors and receiving money from dividends rather than salaries, and that's certainly true for almost all developed nations which have some kind of socialist system which taxes high income, high salaried workers. Okay, so I'm going to put this as 50-50, and then we'll see that we get about 17% after salary and dividend taxes if you're in the 20%. But when I started this, I had in mind 40% tax rate and 32% dividends. You probably don't have a student loan anymore. Employee social security. Yeah, okay, so final amounts then, you're looking at 13, between 10 and 13% in your pocket compared to your starting invoice amount. So I hope this has been very useful for you, and please leave me feedback. This recording was meant for the Financial Independent podcast, so please also let them know how this goes. Okay, thank you very much.